CoreWeave had its initial public offering day to day, and now shares of CoreWeave are publicly traded on the stock exchange. Now, they had some bad luck because today was a big sell off day on the stock market, and this stock IPO'd and traded about at the same price that it IPO'd. It only traded for a few hours, but it ended up closing at around $40 a share. Now, I don't invest in IPOs. Just the history of IPOs shows that they just sell off quite badly after an IPO date. I wanted to show a few examples of what I'm talking about and give you my expectation of this IPO. CoreWeave is a company that is in the data center business. They are trying to build out a data center, and they built out a data center that serves the AI industry. Their initial business was actually to do some crypto work for Ethereum, the Ethereum network. But when they saw that AI was a bigger market, they decided to switch over. They have a lot of expertise in running NVIDIA GPUs. Now, this is a pretty interesting business. I was going to say hot or exciting, but I think the AI hype is over. And now AI is more of a liability than anything. If you have a high stock price, these guys, they have really expensive products that they have to put in their data center to provide the services that they end up providing. The company does have good expertise in the space, but is the space worth investing? That is the big question. And for me, I'm going to be really careful with this investment. They may end up being a real troubled company because, as I'll show in the financials, this is an expensive business to run and the profits could be limited. They also have big competitors. For example, they compete against AWS, Amazon, Azure, Microsoft, and Google Cloud. Those are big, giant companies they have to compete against. I would not want that kind of competition if I was going to pick my competitors. So we'll see how the company performs. But for now, I'm going to look at their fundamentals and see how their fundamentals look and show you a few examples of IPOs and how their stocks for those IPOs traded. So on the company's IPO date, the market cap for this company was set at $18.5 billion. The revenue of the company is 1.92. So you're paying about 10 times revenue. And that's a pretty tall price to pay. This company is, as I'll show, losing a lot of money. They've had only a partial day of history, which is interesting to see. Their revenue is expanding very quickly. They're up to $2 billion if you look at the 2024 year. But when I look at a company like this, I look at the expenses and the cost and the amount of cash they burn. They did 2 billion, close to 2 billion in revenue, and they've lost $863 million. Free cash flow, they burned almost $6 billion. Oh man, that's a lot of cash. So those are just, to me, risk factors. The data center business could be lucrative, but it also could be really expensive and result in many losses. When I look at their statistics, let's take a look at their debt. And they have a lot of debt, $9.26 billion of debt. Man, that is not good. That's a lot of debt. So really that $18 billion of market cap with the $9 billion debt number, I really view it as a $9 billion market cap company because they're not worth $18 billion. My best valuation, if they were just breaking even, would be about $9 billion. So this is just a really risky situation. Their debt to EBITDA is 7, way too high. So their debt really scares me. Their other statistics really don't come up because they're just so young. Let me show you a few examples of other IPOs that have been successful and look at how the stock will trade over the coming weeks, months, and years. Here's a good example of how a company sells off after its IPO, and it does come back and recover. Here's Robinhood, and they IPO'd way back in 2021, and they certainly had a lot of momentum, but from the height after their IPO, the stock sold off, 87% in less than a year. Oh, that's brutal. And this is a business that had a lot of momentum and has really achieved great success. I did not buy the stock on an IPO date. I started buying shares way back here and have done really well with the stock. So this one here at CoreWeave is probably going to follow a similar chart where you're seeing, the stock was somewhat advertised, investors get in it. And I would say the timing is terrible for them, where you have the market really has sold off with AI stocks. And this, I think CoreWeave is going to sell off further. The debt is a big problem. Robinhood didn't really have any debt when they IPO'd. They had great growth, they had great ideas, and they really ended up being a big success story. CoreWeave, I think, is going to struggle. I think the data center business is really expensive. They have $9 billion of debt to worry about. And it is definitely a stock that I'm going to stay away from. It might be an interesting short opportunity because I just can't see how that stock could rally up from $40, but I could see it come down to like $10 a share. So I might entertain that idea. Another example is Rivian. It came out and boy, did it have a lot of fanfare. It came out and it was priced at $129 per share. And when it IPO'd, what was interesting was it became the second most valuable car company in the world. And it had only delivered 50 vehicles. So it was worth more than Ford. It was worth more than Chevrolet, Volkswagen. And it had only delivered 50 vehicles. That's how overpriced the stock was. And since then, it's just really lost a lot of value. 90%. Holy smokes. That's a bad, bad situation. I like Rivian. They're in Southern California. I hope they make it. The car business is tough. And I would say CoreWeave has their hands full. They're in the data center business. You're competing against some of the world's biggest companies like Amazon with AWS. You're competing against Microsoft with Azure, and then Google with Google Cloud, among others. So I think it's going to be a tough road to hoe for CoreWeave. So in essence, I'm going to avoid CoreWeave. I think it's just not going to be a good idea for me to buy a stock of that type. I hope the company does well for the sake of their employees. I hope they flourish and they provide more jobs for their employees. But as a stock investor, I get to pick companies from all different sectors, the ones that I think are going to do best. And as you guys have seen on my channel, I try to get to an intrinsic value and always buy at a discount. That way, on average, I just make a lot of money on stocks over time. And that's what I'm going to keep doing. So that's my evaluation of CoreWeave. I've never evaluated on my channel an IPO. And I thought it would be a good opportunity to provide a video on an IPO and share with you why I avoid IPOs. It's pretty much every stock that has come out, with a few exceptions, has sold off like this. Google sold off like this. Meta, which was Facebook at the time, sold off like this. I mean, every single stock has seen a pattern where they sell off. A lot of the companies come back, like I showed Robinhood, sold off, then it came back. And I'd rather wait a year or two on IPOs. Once we have a good, solid set of financials, then I can really see what the company's worth and make a good investment at that time. So that's my video on CoreWeave. Thank you for watching. Good luck with your investments.